All right, so let's begin the show. And today we are going to be focusing our first half of the show on best performing mutual funds that are beating the benchmark. And the time frame that we are counting over here is almost 12 to 6 months. And I'm joined by Feroze Azeez, Deputy CEO, Anand Rathi Wealth. Feroze, good evening and welcome to the show. A lot of good news for our viewers today, where you have a list of best performing mutual funds and the reason why they're performing, the kind of strategies that these funds have, and also the star fund managers that you might have selected. So I was just wondering, before you want to give out the names in different categories, do you want to decode the kind of parameters that you might have considered before selecting these funds across categories?
Yes, Kavita. See, these have been a little more simpler choice in
Sure.
terms of their extra return which they've generated over their benchmark. See, last 6 months, 1 year, the broader market has done well. Nifty has relatively done worse off than mid cap and small cap. Between the two somewhats, which I remember the number of, where we almost had a 20% outperformance. So this list specifically, which we're going to discuss today, is going to be the excess return, extra return they've been able to generate over a passing mark. That in the nomenclature of investing, especially mutual fund investing, is called alpha. So the alpha is high, and we have arranged them in the chronological order, descending order of alpha. That's point one. But having said which, we also look at, when we try and make another list which has several parameters, we look at a couple of very, very interesting parameters which have the capability to better predict the future and not just rely on past performance, which is what we call the target NAV. Like every stock can have a target. If a basket of stocks, which is called a mutual fund, can it not have a target? The answer is yes, it can have a target. So Anand Rathi Wealth calculates the target of each stock and then in turn calculates the target of the full basket. That we call the target NAV. So that's another very, very important variable which we generally use to recommend, especially on our other shows. Today I'm sticking to only excess return to keep life more simpler.
All right. Okay, so let's not delay anymore, and let's begin. What category would you want to pick up first, and what are the funds names?
Kavita, so since we are going in the chronological order of extra return which they have generated over their passing mark, let me be a little more category agnostic. But incidentally, the category which we are going to first speak about is the mid cap category. Motilal Oswal Mid Cap Fund has generated 21.64% alpha in a period of just 6 months. And that stands out because the same period, this is the fund which generated the maximum alpha. And incidentally, this was managed by a fund manager called Niket Shah, and there has been a CIO change here, and in the asset management company, and that's where there's been some degree of change in the strategy, and some sector calls which were a little more contrary about 6 months back were taken, and that's what has paid off beautifully, which is technology and consumer durables and cyclicals.
All right. Okay, so let's move on to the other categories that you have, Feroze.
Yes, Kavita. So let me go to the next one,
Yeah.
which is a little more offbeat, a thematic scheme, which is called the Bandhan Innovation Fund, which generated about 17.31% extra return over its passing mark. Calling it passing mark because that's more common lingo used. That's called the benchmark. So that that has managed 17 odd percent in over about 6 month period of an extra return. And this is managed by the CIO himself, Manish Gunwani, who moved from Nippon. So here you see the commonality between both these asset management companies, that the CIO moved out from another company and joined this company and rejigged the portfolio. And that tells you the emphasis of a CIO is also equally important and not just the fund manager, because the thought process of the boss of the fund manager has a large influence on the performance of the schemes. And this innovation fund, as the name suggests, is a little more on the R&D sectors like healthcare, which require innovation. And then, of course, Indian healthcare sector has been largely generic driven, but I think innovation is slipping into the pharma sector in India, and I think that's what they're trying to play. Using almost about 17.8% of the weight is in healthcare. Technology is about 10.88% weight. Consumer cyclicals is about 16.56% weight. And all these three have paid off beautifully in terms of contribution to the excess return. And the largest stock in the portfolio was Zomato Limited with about 3.22% weight, and that's played off very well. And since the name suggests innovation, a technology business finds its space in a fund like this. And that's the largest exposure. And the next one, which didn't pay off too well, I think so, 197 Communications Limited is the second exposure. And Prudent Corporate Advisory Services, which is a wealth management firm in a B2B business, are the top three holdings of this fund, which of course is innovative in its nature.
Right. So from Bandhan, you also have Bandhan focused equity, and also of Motilal, you have Motilal Oswal mid cap. You've got Motilal Oswal flexi cap, Motilal Oswal large and mid cap, Motilal Oswal small cap, and large cap. 5 best performings in your list. Any specific reason, any change in the AMC and the fund management team that you might want to highlight? Because we've never seen, I mean, those certain categories have been really best performing as far as Motilal Oswal is concerned, but then here we have 5 funds.
Correct. See, Motilal Oswal as an asset management company and its schemes went through a lull period. Even their PMS went through a lull period. Of course, being the market experts they are, and Ramdevji and Motilal Sahab has been in this wealth management, financial services industry long before most of us would have been. So they've understood the real problem and they've created a turnaround story with Prateek, who's the new CIO who's come in about a year back, if I'm not wrong, and he's rejigged the portfolio, changed the strategy. Their buy right and sit tight strategy didn't work in that period where all stocks were running helter skelter. Beating benchmarks could have been difficult with a static portfolio. The dynamism has gone up owing to the change in the strategy and the person. So both have changed. That's why Motilal Oswal schemes have suddenly come out of their troughs and come to top quartile performance in each of these categories. And that's why these 5 schemes are there. And Motilal Oswal large and mid cap fund, which has generated about 14.55% alpha over its benchmark, definitely stands out. And Motilal Oswal small cap, which is again a space where fund managers stock picking capability is of utmost importance, because small cap is never about return. It's about risk management, and buying index funds in small cap, I think, is a ridiculous idea, because in 250 stocks there will be 20 stocks where I would not be confident to say that there is 100% governance, and that's why I think the small cap funds have to be actively managed, and Motilal Oswal understands businesses and sectors, so that's why it figures in here.
And from Bandhan, you have Bandhan Innovation, which you've explained, and Bandhan Focused Equity. Focus as a category also seems to be doing well. I mean, not as much as Bandhan Focused Equity, but otherwise also. What do you say, Feroze?
Yes, Kavita. See, Focused has a large dependency on the asset management company. There are some schemes, like you rightly pointed out, Kavita, because they're focused high conviction bets. As the name suggests, thankfully, SEBI in 2018 made our life as an investor very simple, as a distributor very simple, by naming them aptly. So, Focused, as the name suggests, cannot have more than 30 stocks. So if it is going to be less than 30 stocks, that means that the fund manager is buying things which he is very confident about, because he does not buy 100 stocks, 70 stocks. So he's buying high conviction ideas. So those are the ones where if the fund manager is good, you will have very good superlative performance. If the fund manager goes wrong, then the performance can be abysmal as well. So I think fund manager dependency in Focused is very important. And Manish Gunwani, having run the Nippon space and created turnaround there, in his last assignment, I think that's where Bandhan Focused, which is high conviction bets, seems to play out beautifully.
Quickly, I just had 30 seconds on me, and LIC Infra, LIC Value, Vito Capital Multicap, Invesco India Contra, and UTI Dividend Yield. These are also specific best performance in different categories that you've listed out.
Yes, Kavita. They are best performers, but I would definitely would like to look at private sector mutual funds having the agility more than LIC for sure. Of course, because we have arranged them in the chronological order of relative performance to its benchmark, they definitely figure. But I think the ones we discussed are the ones which would be a little more high conviction from my side.
These best performing funds, time for the investors to replace the existing funds into these funds which are best performing, or they can just stay put, and this is just a list that you have got out looking at the last 6 months performance?
I think Kavita, to my mind, one or two of these schemes definitely can figure in one's portfolio. That will be Bandhan Focused Equity and Motilal Oswal Small Cap. These two schemes you can replace if you have something in the same category which is not doing too well. Then definitely these two might continue the performance, and not just the past 6 months. Is going to be a reasonable barometer for the next 6 months, 1 year, 2 years as well, because they're managed reasonably well. So these are the two high conviction out of the 12, 13 which we read out.
All right, Feroze, thank you so much for joining in today. That will be all for this discussion today. Thanks.
If you like this video, then like, share and subscribe to ET Now.